Hello and welcome. I'm Anant Rangaswami. Today, Sir Martin Sorrell joins us from WPP's office in Beijing via Polycom link. Welcome, Sir Martin. To begin with, what's happening at Rediffusion?
The direct question. Rediffusion is called Rediffusion Y&R. So I think we've got a 27% stake in Rediffusion Y&R in India, if my memory serves me right. I think Dentsu actually have a 13% stake. And of course, the rest is owned by management, led by Anant, as you well know. So over the years, we've had chats with Anant about what happens to management stake in the business. And so there have been these ongoing discussions, but everybody in India seems to have got excited, including yourself, obviously, as it's the first question that you raised, about the possibility of us buying the other 60% or the other 73%. And as I've said in answer to somebody's question, there's no foundation in that that's going to happen either tomorrow or in 6 months or 6 years. So it's far too early to come to a view on that.
You know, last year you had great news, 18.7% pre-tax profits, far higher than the competition. How did you achieve these numbers in such a tough business environment?
Last year we had good revenue growth. I mean, we showed worldwide 3.5% like-for-like, which was top of the industry. Ourselves and Omnicom were both at 3.5%. Their margins were flat, as they've been for 5 years. Nobody seems to mention that, but that's the case. Our margins increased by 30 basis points. On a like-for-like basis, actually, they were up 60 basis points. The other competitors, Publicis, I think, was about 2.5%. IPG about the same, maybe 2.5%, something like that. Dentsu, Aegis, you can't figure out from the numbers what their organic growth rate is, and Havas was flat or up a little bit. So we had higher organic growth, and we had better margin growth, the best in the industry. Publicis' margin only increased because they released a provision of 40 basis points. And then finally, we managed our costs very well. In 2012, we probably had over-invested in human capital. We had our headcount rose quite substantially. In 2013, we kept it very balanced. So all in all, we were firing on all cylinders, with the exception that in Q4, what we saw was a significant devaluation in fast-growing market currencies. And you know that the Indian rupee devalued significantly in Q4. The South African rand, for example, was down 28% in Q4 alone. So there was a currency headwind in Q4, which didn't help. And of course, that, in the first 3 quarters of this year, is going to have a significant impact. So all the companies that report in dollars or sterling or euros are faced, you've seen that with our clients, are faced with this devaluation of the fast growth market currencies. And that's the biggest short-term issue, I think, for our clients and ourselves, that these fast growth markets have slowed in terms of their growth. They're still growing faster than the slow growth markets, although those markets have improved a bit, like the US and the UK and Germany, but they're still growing faster, but they've also at the same time been devaluing because the US is tapering, and that has implications for investment and exports, obviously, in the fast growth market. So I would say 2013 was another record year. You remember we had a very tough time in 2009. We bounced back in 2010, had a record year in 11, record in 12, record again in 13. The start, I have to say, to 14 has been better than I anticipated, both globally and in India. Globally, we're up in the first 2 months, revenue by over 6% and gross margin by over 4%. And gross margin is probably a better comparison now because we're doing a lot more data where we buy in services, and we're doing a lot more proprietary trading where again we have billings coming into the revenue line and revenues coming into the gross margin. But strong gross margin, up over 4% in the first 2 months, and strong revenue growth. And in fact, in February we were stronger than January, and as the market knows, we had a strong January. So all in all, and it was a good year last year, an excellent year. This year, with a bit of luck, subject to the currency issues, it was even better.
So Martin, in the last month or so, you've made 3 big acquisitions. Can you demystify these for us? There's eCommerce, there's XMKT Group, and there's eGift. All interesting companies. Can you carry us through these acquisitions?
Yeah, well, eCommerce, we've had an investment in eCommerce since about 2010. eCommerce is based in the UK, and it works largely with retailers on building e-commerce platforms, not just in the UK but abroad. So what it does is it builds the online platform for retailers, and this is just another example of the application of technology into our business. So just like Xaxis is our media investment management platform for premium inventory online, eCommerce is our answer to our retailing clients who want to develop their online platforms. eGift, which is an acquisition that we made, I'm talking to you from Beijing, that we made here in China and announced yesterday, is in the premium area. So what it does is it plans and executes premium strategies. Obviously, a lot of premiums are sourced and manufactured in China, and what it does is basically develop the premium business, not just in China, but globally. XMKT, which we announced today in China, is a very interesting company which is heavily involved in a number of digital areas. I mean, it's quite broadly spread in what it does. It does events, it does execution and coordination of those events, it does retail marketing, it does entertainment, and it does digital in a sense of providing digital marketing strategies. It's one of the larger companies that we bought here in China. Our business in India is about $500 million of revenue with about 14,000 people. Our business here in China is about $1.5 billion and is our third largest business after the US and UK with about 16,500 people. Businesses of the size of XMKT are not easy to find in China. And as I say, it's about $25 million of revenue, has about 250 people in major cities spread around China, not just Beijing and Shanghai. And therefore it gives us another window on the world, if you like, particularly with events and retail and digital marketing strategy and entertainment and content. It gives us another window on China. And I would just add one other thing, Anant, and it's just been confirmed by my visit. I mean, I've been to China now 3 times in 6 months, and there is, and I come here now about 6 times a year, and I attended a major conference here sponsored by the Chinese government called the China Development Forum. There is no doubt in my mind now that China is probably, is the most advanced internet economy, I would say, in the world. Now that's an extravagant claim to make. When you look at this, with Alibaba going public maybe at $150 to $200 billion market cap, what's becoming clear, and by the way, also Alibaba, Tencent, Baidu, I think have all got financial transactions licenses, banking licenses, so they will be providing, for example, Alibaba will be providing microloans through the Taobao platforms and through their logistics and financial transactions platforms to consumers. And that fits in very well with the Chinese 12 5-year plan, which is emphasizing consumption rather than savings. So we're seeing, and that's why XMKT, that's why eGift, and you'll be seeing that we'll announce another similar transaction next week here in China. these companies are becoming more and more important in the context of the Chinese economy. And I believe that the Chinese will start to export these models, not necessarily to the US, not necessarily to the UK, but the markets where their managers believe they can get the best traction. They'll be exporting those models, I think, in the coming years.
On that note, let's take a quick break. We'll continue this chat in just a bit. Welcome back. Today, Sir Martin is joining us from Beijing via Polycom Link. Sir Martin, what are your thoughts on Disney acquiring Maker Studios?
Well, I think that's very interesting. It mirrors, what we did with Fullscreen. We acquired an interest in Fullscreen, which Peter Chernin, who used to be with News Corp and has made a few investments in online and obviously involved in film production and online content, invested in Fullscreen, and we've invested with him. We did look at Maker, to be honest with you, and Disney is a far bigger operation, obviously, in terms of market cap than we are. We thought the Maker valuation was quite high, and we thought Fullscreen, certainly from a valuation point of view and a profitability point of view, was a more interesting play as far as I'm concerned. So if you look at what we've done with Fullscreen, and then of course on an even bigger scale what we've done with Vice, Vice is certainly the sexiest, most edgy online content manufacturer, if I can put it like that, on the market today. It's running a number of verticals in a number of areas, from the Ultimate Fighting channel to food and travel and sport and music and news. I mean, it's probably known most for its edgy news coverage, taking Dennis Rodman to North Korea and the like. But I think it's very interesting that Disney goes into Maker, and we've got the highest respect for what Disney has done, and Bob Iger has demonstrated that he can invest in these companies and invest in intellectual IP in an extremely intelligent way and leverage it with the Disney brand. So I'm sure it'll be a very successful investment. And our thinking, actually, at the end of the day, Anna, is very similar to theirs. Content in our business is very important. We've invested in Fullscreen, we've invested in Vice, we've invested in Imagina in Spain, which owns the rights to La Liga. I was watching El Clasico on the television here in early morning in Beijing, the match between Real and Barcelona, which Ronaldo, the Cristiano Ronaldo, was fixed. I was looking at TV this morning where he was claiming there was some sort of conspiracy. But anyway, whatever it is, content, particularly these live sporting events, like the Olympics, like the World Cup, like Formula One, with which I'm involved, are becoming more and more important. So Maker and Disney is another sign of the future come. And there were rumors on Bloomberg yesterday that, if I can mention Bloomberg on your channel, there were rumors yesterday that on Bloomberg that Vice might be going public. So we see what happens.
You just mentioned Ronaldo. What is the other Ronaldo doing at WPP?
He's my apprentice. Haven't you read the press?
Yeah.
No, he's not one.
So what?
He's not. Well, we have a joint company in Brazil with him called Nine. So when he played football for Brazil, he had the number 9. So he's famous for. He still holds the record for the most number of World Cup goals. He is the fatter Ronaldo. Cristiano Ronaldo is the thinner Ronaldo. Our Ronaldo always had trouble making the weight. He didn't like to train, is what I'm told, and what he admits to. But he is the greatest goal scorer of all time, still in the World Cup, by definition of the World Cup. and he has a joint company with us in Brazil, which has been very successful, and he's spending some time in the UK learning a little bit about what we do and how we do it. And more importantly than that even, he's an ambassador for FIFA, ambassador for the World Cup in Brazil, which, as you know, has some challenges at the moment from an organizational point of view, and also infrastructure point of view, and also I think from a social point of view, because activists are raising legitimate questions about what is the value of a World Cup, what is the value of an Olympic Games. And I think the answer to that is very much in the legacy that the Olympics, for example, brings to the community. You see that in the UK, that in the case of London, the legacy of the Olympics was the regeneration of the east part of London, and even more importantly, the youth theme of the Olympics and health and well-being. And we've seen it in sports like cycling, where we've been extremely successful as a nation, not just at London, but before at Beijing and subsequently. And this stimulates the attention and involvement of the population at a time when people are worried about physical health and well-being.
So Martin, we are seeing uncertainty all across the world on many issues. What are the grey swans that concern you now?
Well, and this was a black swan, because I can't recall anybody mentioning at Davos. The issue that came up at Davos actually was the Sino-Japanese disagreement over the islands. And at Davos, what people were saying, which was somewhat worrying, which came up for the first time, was the possibility of some form of military conflict on both the Chinese side and the Japanese side in relation to the islands, irrespective of what the rights and wrongs of that are. So that was one that was added to the list. Now the other one that's come up, obviously, in the last few weeks has been the Ukraine. I mean, Sochi, the Olympics in Sochi, which I went to, and the Paralympics, which I also went to, I think were extremely successful events. But all of the success, I think, that President Putin had, and he did have a success with it, with the Olympics. And by the way, I think that the West missed an opportunity to participate more in the Olympics, particularly the opening and closing ceremonies, but in a project that was personally very important to President Putin, and that I think we probably should have engaged with him more on. I'm not saying that would have solved the Ukrainian issue, but would have given us a platform for communicating more effectively at a time when we need to communicate. You and I both know that communication is the key to getting better understanding and ultimately agreements. If you don't communicate, you know you're in trouble. But putting that to one side for a minute, the Ukraine and the implications of the Ukraine and the Crimea are probably the black swan that now has mutated into a very dark grey swan that people are worried about. Now that's not because of the significance of the Ukrainian economy. It's not big in the scheme of things, but it's already, the implications of the sanctions and the effect on Russia is already, I was here with the China Development Forum, as I said, with a number of Fortune 500 CEOs, and a number of them are already getting tied up, certainly time-wise, with issues around the sanctions in Russia. So that is a worry. Now, if you think about the other things for a minute, US deficit concerns have got less. It's now more about tapering and its impact. That's one grey swan. Middle East, it's still there. I mean, Syria is still a big mess. Hard soft landing in the BRICS. Brazil, there are still concerns over, but I'm not so concerned about it. Russia now obviously is a big issue. India, I think, as I said to you before we came on air, and I feel better about India. The first couple of months in India for us, we had a good year last year. This year looks as though it will be better. So I think overall, the hard soft landing in the BRICS and the fragile five, as they call it, beyond is still an issue. There are other parochial things for the UK, like Scotland and the EU referendum, or the possibility of it post the general election. So there's plenty to worry about, and that results in the big issue, from my point of view, apart from currency and the impact of the devaluation of the fast growth markets, apart from that, which is a short-term issue, I think, the longer-term issue is clients in this relatively unstable environment where growth is below trend. Clients are worried about making investments. They're risk averse. They're cutting costs instead of investing in brand. It's not just investing in brand, it's investing in operating expenditure, OPEX, in capital expenditure, CAPEX, making acquisitions, sitting on cash, 4.2 trillion of it in major multinationals, distributing it to shareholders in the form of buybacks and dividends rather than investing in the business. So there's a risk aversion, which you and I have discussed before, post-Lehman, which is probably at its most acute. So in a slow growth world where you can get a bit of growth, why take risk? Average life of a CEO is 3 to 5 years. Pull in your horns, just keep going, keep improving things incrementally each year, and don't make big bets.
I think we're running out of time here, so I'll say thank you for this.
Thank you, Anant. Good to see you again. And we'll probably not speak before the election, or will we?
No, results are out on 16th May. Elections start in April, but carry on till May. So next month, I'm sure that we can find the time.
Thank you so much.
Look forward to it.
Have a good time in China.
Thank you. Bye.
With that, it's a wrap. So Martin will be back next month. Thank you for watching.